Good morning, everyone. My name is Nishant Singh. I head the Investor Relations function at Narayana Hrudayalaya. I welcome you all to the Q2 FY24 earnings call of the company. To discuss our performance and address all your queries today, we also have with us Mr. Ganesh Shetty, our Vice Chairman, Dr. Emmanuel Rupert, our CEO and MD, Ms. Sandhya, our Group CFO, Mr. Venkatesh, our Group COO, Dr. Anesh Shetty, MD of our overseas subsidiary SCCI, Mr. Ravi Vishwanath, CEO of NHIC, and Durga Prasad, Senior Manager at the IR function. We hope you have gone through the investor collaterals which have been uploaded on the stock exchanges as well as on our website. As usual, before we proceed with the call, we would like to remind everyone that the call is being recorded and the transcript of the same shall be made available on our website as well as on the stock exchanges at a later date. I would also like to remind you that everything that is being said on this call that reflects any outlook for the future or which can be construed as a forward-looking statement must be viewed in conjunction with the uncertainties and the risks that they face. Post the call, should you have any further queries, please do not hesitate to get in touch with us. We would like to answer them to the best of our ability. With that now, I would like to hand over the call to Dr. Rupert.
Good morning, everyone. I warmly welcome you all to the Q2 FY24 earnings call conference of Narayana Hrudayalaya Limited. After a steady Q1, the second quarter of the fiscal year delivered strong performance supported by the growth in business across our units, leading to improvement in realizations in India and Cayman. Consolidated revenue for the current quarter stood at 13,052 million INR, reflecting a year-on-year growth of 14.3% and a quarter-on-quarter growth of 5.8%. NHL generated consolidated EBITDA of 3,265 million in Q2 FY24 at a margin of 25% against 23.2% of Q1 FY24. This margin improvement is attributed to higher revenues, improvement in cost efficiencies and realizations. Our Cayman units continue to deliver strong business performance with the highest ever quarterly revenue of $31.53 million. The recently commissioned radiation oncology block in Camana Bay Hospital has seen good growth in this quarter, contributing meaningfully to the overall growth in the region. We are confident that our Caribbean business will continue to grow through strategic initiatives and investments. The balance sheet and liquidity profile at the group level remains strong with group cash and liquid investments of 8.74 billion INR against gross borrowings of 9.61 billion INR, a net debt of 0.86 billion as of 30th September 2023. Our net debt to equity ratio remains steady at 0.03, giving us sufficient room to fund our expansion through a mix of borrowings and internal accruals. We have incurred capital outlay of close to 3.94 billion INR till the September quarter and are on track to spend the balance amount in the remaining quarters of the fiscal year. We take immense pride to announce that Narayana Health is now the first healthcare group in India and sixth globally to be awarded the Joint Commission International Enterprise Accreditation. With this achievement, 8 of our hospitals were accredited with JCI accreditation for delivering world-class care at industry-high standards of quality. To improve awareness towards preventive health care, we conducted the highest number of electrocardiograms, that is ECG, in a single day at a single place, which has earned us a coveted spot in the Guinness World Records. This record-breaking attempt took place on 21st September at the Health City campus in Bangalore. On the clinical front, the Health City campus successfully performed 22 cardiac surgeries using the robot, demonstrating our capabilities in adapting the latest technology. The Majumdar Shah Center successfully performed 5 cases of limb reattachments during the quarter. The R.N. Tagore Hospital in Kolkata performed some cutting-edge complex clinical work in oncology and renal sciences segments, such as the redo video-assisted thoracoscopic surgery for a recurrence of a lung tumor in a 3-year-old child, and a robotic renal transplant in an extremely obese patient with a BMI of more than 37, where the patient was discharged within 9 days of surgery. Our focus on digitization and business transformation has led to significant improvements through the NH system. We've been able to reduce the administrative workload by 36% through our Narayana Health app and patient kiosks. Our doctor application called the Adi has helped to reduce the doctor response time by 45% through real-time alerts and integration. By enabling payments and discharge alerts on WhatsApp, our patients are now able to get discharged directly from the ward hassle-free. We have also launched a new app for nurses called Nama, which is aimed at reducing paperwork and man-hour spent on data entry. Our new venture, the Narayana Health Integrated Care, has shown healthy growth this quarter after starting on a positive note in Q1, seeing good traction with the retail segment. Revenues for the quarter has crossed 52 million INR with more than 45,000 patient transactions. We will continue to grow this business and serve our customers with clear focus for improving their health outcomes. We continue to upgrade our clinical and non-clinical operations across the group, transform the patient service levels, increase our throughput, build more capacity, invest in more digital patient outreach channels, and improve our operational efficiencies. We are reasonably on track on our ESG commitments and continue to focus on creating meaningful social impact in addition to pursuing our environmental goals and upholding higher standards of governance. We are simultaneously pursuing organic and inorganic growth opportunities both in India and overseas that will derive synergies from our existing operations. Maximize value for all our stakeholders while keeping a close watch on return on capital.
Thank you, sir.
Thank you.
I would request everyone to now use the raise hand feature to start posing their questions. Yeah, Pradnya, please go ahead.
Yeah, hi, good morning. My question is pertaining to your slide where you have mentioned the capex breakup. I see around 250 odd crores for some brownfield expansion. So could you please elaborate as to where this brownfield expansion is expected to come up and by when we should be seeing that?
Yeah, like we have explained earlier, we are looking at brownfield expansion in our flagships, which is mainly Bangalore and Calcutta. We have land in our Health City campus itself, and we have already started, we've initiated the process to start building, and we are in advanced stages of closure of land in Calcutta, and we will start building next year. So that's largely the brownfield plus greenfield that we have spoken about.
Okay. I thought the Kolkata land would be in the greenfield part of it, the 150 crores.
Yes, that is correct. The land itself will be in the greenfield part. That is correct.
Okay.
Yes.
So if I have to look at your bed capacity expansion from here to 2 years later, then how should we look at the bed addition then?
So, see, what we do is we keep continuing to enhance our ability to treat more patients, and bed addition is just one way in which we do it. What we have done is recently we've added 2 more floors in our Howrah unit in Calcutta, where we would have those operational with 110 more beds by the end of Q4. We will also start construction work in Bangalore Health City. We've got all the permissions and we should start the groundbreaking from Q4 of this year with a plan to add 700 more plus beds for the next 3 to 4 years. Plus, Sanjay has already mentioned about the advanced stages of land acquisition in Calcutta with more updates in next quarter. If things work out in that way we have planned it, towards the end of first quarter or the second quarter, we will start construction there. Plus, we are also looking at other projects in our greenfield, in our flagships, both greenfield and brownfield, in an opportunistic way. It should materialize in the days to come. But what happens is there won't be any significant bed additions till the construction of all these complete in 3 years. But however, we believe that we have sufficient efficiency levers to cater to our demand and growth aspirations in the interim till we have these beds completed next 3 years time.
Understood. Thank you. And lastly, from going forward, what levers do we have on margin expansions for our India business?
So we continue. Yeah, go ahead, Venkatesh.
So we, as we have said, we reiterate the same point. See, we keep focusing on our high throughput all the time, like we have been doing. One is improving on our throughput. We are also significantly investing in technology to improve our throughput. We're working on faster discharges, faster lab results, seamless appointments. We perform various cardiac surgical procedures and robotic procedures, which is a morning evening admission discharge type of a thing, where we utilize our beds more effectively during the prime time. We're also working very effectively on those discharges which happen post 2 p.m. and causing shortages in morning admissions, trying to overcome that. There have been substantial penetrations we have done on that, and things have improved a lot. We're improving throughput in ICUs. We're developing communication tool to doctors and nurses to coordinate care and discharge patients faster. If you see the A loss, our plans were to bring it down over a period of time to 4.1, and we've already got it from 4.8 to 4.4 now, which means we are utilizing our beds more effectively. So it's like, we're significantly investing in technologies to improve our throughput, and all these will help us achieve higher revenue. See what is happening, the areas which we gain out of this, we address the capacity bottlenecks by adding more ICUs, more OTs, more diagnostics, more labs, which enable us to increase our revenues at the same infrastructure and same cost level in the next 2.5 to 3 years, till we have our capacity, expanded capacity ready for utilization.
I would only want to add one word of caution there, that there are also significant headwinds that we continue to face from a inflation, government action point of view, and so we have to take the commentary in corroboration with that as well.
Sure. Yeah. Thank you for answering my question.
Yes, yeah.
Thanks, Pradnya. Can we have the question from Prithvi, please?
Hi team, congrats for executing so well over the last few years. So Viren, my first question is on the India business. So obviously we are now at almost 1,000 crore revenue and 18 to 19% operating margins. I mean, obviously you have been talking about, various throughput, efficiencies, etc. But given that bed addition is going to take some time, how much more can we squeeze in India business? And can this revenue be maybe of 50 to 60% higher only from the existing beds?
With or without further investment?
Right, without any further investment.
Without any further investment, you can do maybe high single digit revenue and margin expansion, but eventually your doctors will leave and the building will start to look shabbier and shabbier. We will have to reinvest in the rooms every 5-6 years, in changing the equipment every 10-12 years. All of those things are required to generate slightly above that, as well as expansion to meet the needs of the fact that so many patients are coming and we're running waiting list. So without investment, this business can still grow for about a decade, but then you'll be a has-been in the industry.
I think my question is more on next couple of years, as there would be any new bed addition, how much more you can squeeze from the existing assets?
There will be minor bed addition. It's not that nothing is happening. The things that are coming up are brand new buildings. But there's still a lot of work that is going to happen in the existing buildings that won't necessarily lead to bed addition. The net beds may stay the same. Certain beds will come up, certain beds will close down. Certain ICUs will come up, OTs, procedure rooms, OPD areas will be reconfigured. What's more important to stress is our ability to keep taking in new patients will go up. So throughput and total numbers served in the same infrastructure will keep increasing till the new infrastructure comes, where suddenly you have a whole lot of new capacity and that will take you much higher.
And on the margin side, what do you think about sustainable margins for the India business?
It is as the guidance we always give. We'll do the best that we can and keep retaining our focus on providing extreme value-based care, be very fair on the pricing, and treat as many patients as we can. What we can deliver, we'll continue to deliver.
Can I have the breakup of new hospitals revenue and margins for this quarter?
Yeah.
Venkati?
Yeah, I'll give you that information. So when it comes to new hospitals, these 3 hospitals, which is SRCC, Gurugram, Dharamshila combined, is at around 119 crores for this quarter against 115 crore in Q1. So it has reasonably grown, and EBITDA has improved meaningfully from 6 crore in Q1 to around 8.7 crore in this quarter. So SRCC Mumbai, we have been able to reduce our shortfalls from 2.2 crore in Q1 to 0.6 crore in Q2. We remain on track to reach flat EBITDA by the end of this year. We're moving in the right direction on the new hospitals, and we're confident of the group continuing to grow and deliver improving margins in these coming quarter and years. Few of these initiatives in both Mumbai and in Gurugram, we are looking at a combination of both when it comes to specialities, a combination of both inorganic and organic initiatives in both these in terms of certain new introduction of new specialities, trying to rebuild on existing specialities to see how we can consistently maintain and improve on our margins in both these new hospitals. So Dharamshala is already on track and hitting 15 to 17% margin, and these others will also follow in the next 3 to 5 years based on these plans which we have worked out.
Okay. Anish, couple of questions on Cayman business. One, obviously this quarter there seems to be a fall on the footfalls number on YOY basis. Could you just explain, what led to that?
Hi, Prithvi. Thanks for the question. Which footfall are you talking about? The outpatient? Or?
Yeah, it's on outpatients.
So just to clarify, if you're looking at the investor presentation, the blue bar is last year, Q2 FY23, 7,600. The red one is Q2 FY24, that's 9,600. So I'm not sure. I think you're looking at the right information.
Okay. I'll check
so
on this.
Just to clarify, it was 7,600 Q2 of last year, 9,600 Q2 of this year.
And could you give some timeline on the new capex? I mean, the new hospital in Cayman.
Yeah. So as we spoke about the last time as well, we remain on track to commission that in Q1 of the coming financial year. So that would be in the April and June timeframe, hopefully in the earlier half of the quarter. We're making meaningful progress in the civil work. In fact, we're starting the services and a lot of the interior detailing as we speak. And of course, there's some time that it takes for approvals and inspections, etc.
Thank you. That's all from my side.
Sure.
Thank you, Prithvi, for the questions. May I have the next question, please? Yeah, Anuj, please go ahead.
Yeah, thank you for taking my question and congratulations on a very good set of numbers. So I just wanted to get some understanding in terms of the occupancy and other basic metrics, like I know you don't track ARPOBs. So from an ARPP perspective, while today morning in the commentary you guys have said that there was not a material impact on ARPPs. So I just wanted to understand if you could give a breakup of how Bangalore, Calcutta and other non-core geographies have performed in terms of occupancies, because you guys used to give that data earlier, but now I think you've stopped to. That will be helpful if you can share that again. Thank you.
When it's occupancy, why we keep reiterating on the same thing, we don't want to view occupancy in isolation. We have said we are a high throughput center. So occupancy actually doesn't it is not so materialistic in terms of our performance, because I have said we already invest in throughput technologies for improving discharges, appointments. We perform morning and evening procedures, which doesn't take too much time for the patient to wait. It comes in the morning and goes in the evening. We are also developing communication tools, improving ALOS. But our occupancy, having said that, is far higher at the India level on the upwards of 65%. And these improvements can be seen across all our units. But we continue to again harp on the same point that midnight occupancy measured on census bed is not a good measure of a hospital utilization. In fact, the revenues which have grown more than double digit for 2 consecutive years without any meaningful bed addition is actually a proof of that. So when it comes to occupancy, we are upwards of 65% and you can see it across all our units.
Yeah, thank you. But while I understand that, I just wanted to understand if there is a breakup of core and non-core geographies that we can provide. It's more of an academic question. I understand that. And that's why I said not just occupancies, I wanted to understand the other metrics as well. While I understand that ALOS is down from 4.6 days to 4.4, I just wanted a view on how the other metrics are performing.
Yeah. Let me comment a bit on ARPP, which, like we acknowledge, is a better metrics than ARPOB. We have, as you are aware, for us pricing is not the primary lever for improvement, and we focus heavily on efficiencies. So we take very moderate price increases, and if you see, there is a certain year on year we have shown a reasonable price increase, which is, I think, healthy and yet affordable for our patients. With the short period of time, these numbers fluctuate a bit, and therefore they are not very representative quarter on quarter basis. Our ARPP numbers are shared as in our deck. From utilization point of view, just one more small color I want to add is that while we have improved on utilization across all our units, as you can see from our revenue mix, our flagships are continuing to perform very well, and therefore they are also running at very high utilizations. As we keep debottlenecking, we will keep being able to process more throughput through the same facility. That will help us, use our resources better till our capacity addition comes up.
Got it, ma'am. Thanks a lot. Thank you.
Thanks, Anuj. Can we have the next question, please? Yes. No, Anuj has already asked. Next question, please. Yes, again. Please go ahead.
Yeah. Good morning. I hope I'm audible.
Yes.
Yeah. So the first question is on your ARPP, Cayman Islands outpatient, up from $1,000 to $1,300 if I read it correctly. Year on year, that's a 30% jump. If you could elaborate a little bit on that significant ARPP jump, I understand or possibly infer that the Concall unit might have something to do with it, but if you could explain that.
Yeah, actually, Gagan, your guess is spot on. We classify radiotherapy patients as outpatient because there's no length of stay, and it is a relatively much higher realization than your traditional outpatient services. So you will see that spike over there. We don't expect any further increases because the full effect of the radiotherapy is already borne out in the quarter. But yeah, you are right.
So it sort of stabilizes at 1.3 or rather 1,300 is what you're indicating.
I mean, yeah, that's a very specific number, and it's not something we would look to aim for. But yeah, where it is now is more or less where we expect it to be. There will be some other changes when we add more. As Venkatesh and the others commented, we are constantly looking to convert more and more services to daycare. So we'll be starting daycare, joint replacements, and so on. So once that happens, obviously that number could move. But for now, this is where it should be.
And there's a good jump in your outpatient volumes, 7,609 going to 9,615. Again, that would also have a very substantial contribution coming from the onco unit, or that is the wrong inference?
No, of course, oncology would contribute to it, but by volume, it's not very substantial. This is the general improvement in all specialties, but a large chunk of it is we are now reporting our ENT, the acquired business as well, which is predominantly an outpatient service. So it's a high volume outpatient service.
So you're saying that erstwhile this was not reported in the OP volumes, and now it's being reported?
We recently completed the acquisition, and we wanted to start it after finishing an entire quarter. And, this is now reported in that. So it's a combination of our organic growth, the oncology, which you identified, as well as a large percentage of it would be because of the ENT.
And
it's there in the footnote as well, in footnote 1 of the slide. Yeah.
Okay. All right. And the ARPP for your inpatients actually dropped year on year in Cayman from 39,000 odd to 34,000 odd. Any explanations there?
Yeah, I wouldn't look too closely in that. It's just that the similar quarter last year was an unseasonally high number. But if you look at the general trend, Q1 was, 30,000, around, 30,918, whereas we are at 34,000 now. So in general, I think these, the trend is positive and where we are comfortable being. It's just once in a while you're going to be comparing it to a base quarter, which was unseasonably high.
And I mean, the start of the call you indicated almost 394 crores of capex has been done for the full year. The budget is around 1137 crores. Your cash position is very healthy, and so is the gross debt position. Not really moved up too much from last year. Is there reason to believe that in second half, because the capex might, spike up to 700 odd crores from the 394 that we've seen? There will be requirement to add further to the debt, and if so, to what extent will you need to fund it via debt?
Yeah, Gagan. So out of the capex spending for the remaining of the quarters, we'll be spending around another, say, 450 to 500 crores of debt of capex. Out of that, we can fund, say, 50% of that money will come from the debt. So even if we do take that, say, 250 odd crores as debt, our net debt to EBITDA ratio will still be very comfortable at 0.3 to 0.4.
Correct. So it's not really too much of a substantial debt addition at all. And now you've had two years running of 1,000 crores plus capex, and you managed to do that without, really leveraging your balance sheet too much at all.
Yeah, because we have got pretty healthy cash flows. If you look at the EBITDA, we have seen crossing 1,000 crores on the annualized basis. So with that in mind, we should not be above 0.5 at any point in time for this financial year.
So last year, I think there was indication that, that cash flow was very healthy because of certain one-offs. This year, again, if you could, sort of give some idea, has the cash flow been equally strong or better, and even adjusted for the one-offs?
I think the cash flow is a representation of the underlying performance of the business. Given that our EBITDA has been healthy and we've been able to maintain the payer mix with a reasonable balance, therefore it is reflecting in the cash flows.
Right. So 1H was 587 versus 535 last year. So there's no change in the working capital here at all? I mean, in terms of
no significant change in the working capital this year.
Okay.
We kind of operate at a almost neutral working capital position. So we've been able to hold on to that in the current year also.
Right. And again, at the start of the call, you indicated that without any investment at all, you can still manage to grow high single digit. And you obviously are investing quite substantially in, you're reconfiguring, you're adding OTs, you're adding equipment, you're upgrading equipment. So, just to take a cue from that statement, if without investing you can add or incrementally to sales by a high single digit, with this investment, part of it which is going to increase throughput, and part obviously comes later in brick and mortar, in bed terms. Even with the investment that goes in increasing throughput, ideally the minimum growth limit should be a high single digit, and possibly supplement to that with whatever capacity expansion you're doing in terms of equipment. Is that a reasonable surmise?
That's a forward-looking kind of statement which we don't want to make. But what we can definitely say is that indicators are all in the direction of being able to grow as well as we've grown in the past. Obviously, there are various factors, like for example, Q3 is a seasonally weak quarter. So therefore, our volumes will be, every Q3 volumes are slightly weaker. There are various factors that come at play. So it's very difficult to give a number like that.
I understand. Seasonally, I'm not looking at quarter to quarter movements. I'm obviously comparing year on year, which adjusts for seasonality. And in any case, I'm looking at a 2-3 year time frame, and I'm just trying to validate the logic, not looking for numbers here. A final one on tax rate. I think it's been pretty low for the first half, and you indicated last quarter. that this year will be effectively a low tax rate number. How should we budget for tax rate this year and then going into next year?
Tax rate, we will be around what we have seen, around 10%, Gagan. That is a good estimate to take.
Okay.
Because we have moved to the new tax regime in India. So we will be able to see that benefit.
And next year, how should we think of that?
Next year, there will be no significant change except how the mix moves, which we cannot comment at this point in time.
Mm-hmm. So next year we should budget for an effective 25% tax rate on India. Is that a reasonable way?
Yeah, around 25% for India is, you can take that number.
Right. Final one again on Cayman. The ALOS at Cayman tends to be 8.9 to 9.1 days. Any reason why that number is as high as that? Because in India you are at around 4.5.
Yeah, Gagan. So in Cayman, we are sort of the national hospital for the country, and there isn't much healthcare capacity aside from much at the government hospital. So there are certain chronic patients who are very, very sick and who perhaps need longer term care, some amount of nursing. In other countries, they would be assisted at home, or they would have some other sort of home care, out of hospital care. But the government's obligation is to care for these patients, and they're universally insured. So we, on behalf of the government, admit these patients for a very long time, many months at a time. So this just skews the ALOS number.
All right. Thanks. I'll get back in with you. Thank you.
Once again, can we have the next question from Vinay, please?
Yeah, thank you. Just one thing on your numbers for the quarter. I'm comparing quarter to quarter. You have around 212 new doctors added in this quarter. But if I see the expenses on doctors, it has actually gone down. Can I have some explanation on that?
Because of the revenue effect, revenue has come in much higher. So therefore, as a percentage, it is not reflecting.
Yeah, from the number point of view, most of them would be training positions, and from the postgraduate training positions would have joined in the quarter two. But we do keep adding senior doctors as and when required from every unit. So that is a constant ongoing process that we follow. But for this relatively larger number, it is from the students who have been joining us in this quarter.
Yeah, because the total doctor expenses have actually gone down from 2,315 million to 221 million. And the other part is the other admin expenses and other employee expenses have also gone up disproportionately high, while the others have been very well controlled. And I must give you a pat for doing a good job there in controlling your costs. But any particular reason why the other employee expenses have really gone up by around 14% quarter on quarter, whereas your sale has gone up by 5.8%?
We have taken some investments in repair and maintenance in quarter two because it was a good quarter and we wanted to get some of the R&M work done. So because of which there is a one-time investment and increase that you are seeing. It will taper down going forward. There is a certain level of base that will continue, but some of it will taper down.
Okay. And lastly, I see a drop in depreciation. Any particular reason, quarter on quarter drop in depreciation?
We even capitalized our work in progress. Any new significant capitalization has not happened. And some of the assets, as their life cycle ends, they get decapped. So you don't need to overread into that number because our depreciation will go up. We are capitalizing 1,000 crores this year. That will go up only.
Okay, and the last thing is on the NHIC working. You have seen a good, healthy addition of patients in this quarter compared to the last quarter, but your average billing has gone down from 1,538 to 1,158. And the losses have also, I think, increased from 5.8 crore to 6.4 crore. What are you? Of course, it is early days. It's hardly a year since you put that up. But how do you see that contributing in future?
I will request Ravi to take the question.
Sure. Thanks. So yeah, I mean, as you said, it's early days and we keep experimenting with various value propositions to the customers. So I would think that for a little while, this might go a little bit up and down as we come up with new propositions and new products. And so I don't again read too much into that. Right now we're focusing on making sure we have transactions and learning from our customers, understanding exactly what they need, what is the best value and best service we can give them. And as our learnings grow, over time, of course, directionally we do want to take it up. And, I think over time it will stabilize, but I think for the next few quarters, this might be a little bit up and down as we experiment.
Yeah. And how do you see the contribution of NHIC into your, is this a feeder into your main hospitals, or what exactly is the role NHIC plays here?
I'll answer this one. At this point, NHIC is a standalone entity that will build out clinics and offer subscription plans for patients, with the idea that we want to keep them healthy and do checkups and manage them in the clinic itself. Obviously, once they are familiar with our system and get to know the brand better, should anything happen in the future, then there was a possible referral to the main hospital, but that's not the primary goal. The doctors over there are trying to keep them out of the hospital and with a mission that's oriented on keeping them healthy.
Yeah, fantastic. Thanks a lot. That's all from me.
Thanks, Vinay. Can we have the next question from Chinmay, please?
Good morning. Thank you for taking my question. While responding to one of the participants, you talked about inflationary headwinds and government action. Could you elaborate that point? What specific actions are we referring to?
Usual things that happen before elections. There are in the past certain populist things around price control. Certain states will offer expanded Ayushman programs. A lot of government departments tend to run out of money just before an election. So there are little headwinds that one usually faces just before a national election that we're just a little cautious about, in addition to whatever seasonal impact that Q3 will have.
Understood. But nothing material, right?
Nothing material yet, but as and when these things happen, then we'll all get to know at the same time.
Understood.
Anyone else?
Any more questions, please? We still have around 20 minutes to go. If anybody has any questions, please ask. Yes, Vinay.
Yeah, just one more thing on the Cayman Island business. We are looking at currently working at around 50% occupancy of the 110 beds that you are working there with, because when I see the average revenue per occupied bed, you are saying it is 2.3 million for a 31.5 million sale. Am I reading those numbers right, or is there is some error there?
Where are you? Could you please clarify which document you're referencing?
It is the slide number 11.2.
Okay.
The small note 2 ARPOB. We are saying 2.3 million for quarter FY24 against our operating revenue of 31.5 million. I couldn't relate to it. I mean, how do you read this figure?
Nishant, I think we will clarify this. So your question is, there's an ARPOB of 2.3 million over there, but we don't have the occupied beds. So how are you relating that to the revenue?
Yeah, I'll tell you what I'm doing. I'm just looking at the numbers of your discharges and multiplying them by the average length of stay to say how many bed days are occupied out of the total 9,900 bed days that you had in this quarter, and then working out what is the average stay there. When I divide, I don't get this 2.3 million per occupied bed.
Yeah. Yeah, that's because the average revenue per occupied bed will include all revenue, inpatient and outpatient, whereas the discharge number will only represent the inpatient revenue.
Okay. Because that's the only thing which I couldn't reconcile here. So I thought I would just check out with you.
Yeah, sure, no problem. No, it won't add up because you're missing a component. Yeah.
Okay. Thanks
Nishant, you can just clarify if that's
Vinay, if you have any further doubts, we can get on a one-to-one call and we can clear this.
Sure.
As Anish said, that this is not the only number. We have this even the OP numbers. Yeah. But we'll give you more clarity in case if you want after the call.
Sure. Outpatient in the sense that they get admitted in the morning and leave by the evening, and so they don't contribute to the inpatient, but they're still occupying the bed for the whole day and count to the OP numbers.
Okay.
And this is also exactly why we don't prefer, ARPOB as a metric. But yeah, to your question, that's the answer. Yeah.
Thanks.
Yes, Vineet, can we have your question, please?
Yeah, thanks. First of all, congratulations on the great set of numbers. I think my question is also on the Cayman Island. So, is there any how do we see the future of Cayman Island, and is there any competition coming from Indian hospitals? That's one. And is the US insurance, can that be used in Cayman Island now?
Hi, Vineet. Yeah, thank you for your question. So, in terms of competition, there is, the government hospital, which is a very large tertiary hospital. There's also another private hospital. It's a very active healthcare market. There are over 400 registered, medical practitioners and over 100 different practices of varying configuration. So, it is a market that is quite competitive in certain areas. We're not aware of the plans of any other Indian operators. We can't comment on that. It is a small market, and there is most players know the other one. So, but we have no information and we can't comment on that. So that's to your first question. Could you repeat the second one, please?
On the US medical insurance, can that be used for having a treatment in Cayman Island?
So most insurers will cover, if you're here on a holiday or if you're traveling here for other reasons and you require hospitalization, almost every US insurer will cover you. Now, in terms of a patient electively going, that isn't usually done. But when there is a process for patients to apply to the insurer to do that, and in most cases we have seen it being approved simply because the costs here are so much lesser than the US. But it's a very, very unusual fringe use case, aside from an emergency use of a travel insurance sort of benefit.
Thanks a lot. Thank you. Clear.
Yes, Gagan, can we have your question now?
Yeah, I mean, referencing the previous question on ARPOB, if I look at your operational slide on India, slide 9, the ARPOB for India is also indicated at around 13.4 million for Q2 versus this year versus 12.1 million Q2 last year. I'm just trying to clarify, are you annualizing the ARPOB figure and then giving it out? Because 13.4 million ARPOB, if I then, consider it as an annual number and then divide by 365, the ARPOB comes to 36,000 odd, which looks more sort of understandable. Or am I getting it wrong here?
Yeah, we analyze the number, Gagan, that your reading is correct.
Okay, so the same would have been done with the Cayman number as well? You annualize the number? The 2 million odd?
Yeah,
yes.
Yeah.
All right, I get that. And on CAPEX, while your slides indicate last year, I think if I look at last year's presentations and even this year, I think indicated a capex of 1,000 odd crores. But then if I sort of try and tally it up on the balance sheet, by looking at how much gross block has moved up by and how much capital work in progress has moved up by, and sort of take the difference between close of FY22 and close of FY23, probably comes closer to 700 crores rather than 1,000 crores. If I've got it correct. So basically last year then, has the capex been of the order of 700 odd crores or 1,000 odd crores?
It could also be because of some of the equipments in pipeline. So they may still be, we would have raised orders and the equipment would still be landing. But from a commitment point of view, that money is spent. So the amount we are reporting are all committed capex spends, which will capitalize. You should give us 6 months lead time for us to be able to capitalize and show those numbers in the books.
But if you sort of committed, does it not come up in CWIP?
It won't line up exactly. The intent is that all things planned, we'd want to spend about 1,000 crores last year and this year, but a lot of orders got delayed, a lot of construction work got delayed, and so it didn't exactly line up. So there's been a bit of lag in that. We're trying to catch up, but it won't be exactly 1,000 crores added to the balance sheet.
But if you look over a 6 months time frame, it will start reflecting. Because the cash is spent, it's just getting capitalized or coming into CWIP at different points in time.
Okay, fine. Last one on Cayman. You indicated that you'll start the new hospital, I think, in the first quarter of next financial, possibly, if I got it correctly. How should we? I mean, because this is going to be different from the onco unit that you put in, which is ramped up fairly fast for you. How should we look at the financial implications of that new hospital? Phase by phase. Let's say for the first 6 months, next 12 months, and then when it stabilizes, what time will it take to stabilize and hit an optimal utilization? And at that level, what implications does it have financially for margins and growth? If you could give us some indication of the roadmap of how this will move, it will be it.
Gagan, your question is very specific, and unfortunately my answer has to be quite vague. But it is a new hospital. As we've discussed before, there will be a decent chunk of fixed costs that will come online when we commission the hospital. It is not a hospital in a new location. In a new country. It's in the same location. The patients know us, so the ramp up, we do expect it to be reasonably fast. But having said that, it is obvious that there will be margin dilution until we truly see incremental revenues coming in. How long that will take and quantifying that is something we're not in a position to give out at this moment.
And will you be able to run it with the existing doctors that you have in your existing hospital, or you will incrementally add? And if you will add, can you give some indication of how much staff, nurses, doctors, paramedics will you need to add, and how will you be, sort of recruiting them? Will you be sourcing them from India, and how you go about it?
Yeah, so to the first part of your question, so definitely, a lot of the services we offer are similar to what we're already offering. So it will be the existing doctors whose output will increase. A lot of departments will need, the second or third line of doctors to come online to handle the increased volume. Some don't. Nurses obviously is directly correlated with the number of patients we treat. There's not really any operating leverage there. The more patients we treat, which we'll be hiring more nurses. To your question around sourcing, we'll follow the usual sourcing routes we've been following for our existing hospitals, which is a combination of our network in India and other relationships in the region closer to this part of the world as well.
So just curious to know, for your staff who goes from India to Cayman, do they sort of go for a specified tenure and then return, and then you roll between staff and some new set of people go in after a stipulated period, or do they stay there, till they serve you under the Narayana?
Yeah, so the senior people are more or less constant. They're here for it's a longer term relocation. If this is more of a permanent or a longer term plan. certain frontline staff, junior people, they're here for certain times of, in their career, in their personal lives when this makes sense. And after a couple of years, they go back home or they cycle out. But that's the junior staff. Most of the senior people would be more or less constant. At least that's our intention. Yeah.
How does your sort of attrition came in your junior staff or in your nursing staff compared to your India facility?
So definitely nursing attrition isn't as much of a problem as it is in India, because once you're earning how much these people earn in Cayman, there aren't many places where you can earn more. Having said that, there is attrition mainly to the UK right now, and the reason for that is not compensation. In fact, our compensation would be a little higher than the UK. It's just an issue of post-tax compensation. It's just a concern around, in the UK, there are more opportunities for their partners and spouses to have an education. There's a more clearer route to citizenship and a longer term security for them. Whereas here, for a nurse, it's those things are going to be difficult. So we do have attrition, but not as much as it is in India.
I mean, do you sort of facilitate education for their children in Cayman to a certain degree? I mean, is that something you can do and sort of help them retain or retain them longer?
Yeah, it's not the cost of education. It's just that in Cayman for a nurse, it's next to impossible to get long-term citizenship over here. They'll not fulfill the criteria, whereas in the UK they will. And in Cayman, if their spouse is not a nurse and if they're working, there's very little employment opportunity outside. It's very difficult. Whereas in the UK, those things are much easier. So, all factors considered, family, personal, etc., for quite a few people, the UK is holistically, sometimes a better option. So they pursue that. But wherever we can to make this more attractive, we do that.
Thanks. I'll get back to you. Thank you.
Thanks again for your questions. Can we have the next question from Alankar, please?
Hi, thank you for the opportunity. Just two questions. Firstly, would it be fair to assume that the sequentially higher margins in this quarter is also a function of higher margins at Cayman due to pickup in the radiology block?
It's a mix of both, yes, Alankar. We have seen good performance in India as well as in Cayman. Yes.
Understood. And the second question is, so when you talk about improving throughput, are the efforts more skewed towards Bangalore and Kolkata, given the relatively higher occupancies there, or these are uniformly happening across our entire India network?
So it's like we just not concentrated only on these two flagships. All these initiatives in terms of technology is our core plan across the group. So it happens irrespective across all the regions where we exist, which is north, south, east, west, everywhere. And there is nothing unique to only flagships in these initiatives. Throughput, technology, efficiencies are driven uniformly across all our units in the group and not specific only to Bangalore and Calcutta.
Fair enough. Yeah, sorry, go on.
Yeah. The impact of these throughput changes it's felt more in the larger units and the flagships. So that is the stuff that we have noticed. In the heart hospital, the same facilities, same infrastructure of ICUs and the operating rooms. Earlier on, pre-COVID, we used to do around 500 plus cardiac surgeries. Now we are able to do around 870 to 900 cases in the same infrastructure.
That is the outsized impact.
It's just the impact becomes very big.
Understood. Yeah, that answers my questions. Thank you and all the best.
Thanks, Alankar. Do we have any more questions? Last 5 minutes.
Yeah, Kapil.
Yes, Kapil.
Yeah, hello. Congratulations on a strong performance in the September quarter. I would just like to know if this traction of strong performance has continued so far in the present quarter, October to December, of which we are already in the middle.
Q3, Kapil, is a seasonally weak quarter, as you are aware, because there are a lot of festivals that come in Q3. We have Durga Puja, then we have Diwali, and then we have Christmas coming on. For all hospitals, Q3 is relatively weaker. So standing today, we can only say that. Anything else will be forward-looking.
A lot of these things get pushed forward. These are mostly where do a lot of elective cases. So we've seen that patients tend to postpone their procedures to Q4.
Okay. Okay. Thanks.
Alankar, do you have any further questions?
No, not really. Sorry, I forgot to. Yeah.
No problem.
Any others?
So if you have no further questions, we would like to conclude our session. Thanks everyone for your active participation. As usual, please do feel free to call us, reach out to us in case of any further queries. Thank you.
Thank you.